there's all kinds of activities that arrive out of commercial real estate development, which occurs on a big scale. But it all has consequences, and I think we are starting to see the consequences of people who could borrow at 2.5%.
Is Warren Buffett's warning about the consequences of rising borrowing rates coming true? Join me as I delve into commercial real estate with insights from investment legends Warren Buffett and Charlie Munger. According to the Financial Times, Charlie Munger has warned of an impending crisis in the U.S. commercial property market as American banks fold many bad loans amid falling property prices. Let's begin the discussion by listening to what Charlie Munger had to say about the hollowing out of downtowns in the United States during the Berkshire Hathaway annual meeting.
But I do think that the hollowing out of the downtowns in the United States and elsewhere in the world is going to be quite significant and quite unpleasant. I think the country will get through it all right, but as they say, it will often involve a different set of owners.
Charlie Munger's statement highlights the sobering reality of the downtown transformation. While it foresees significant challenges, it also underscores the resilience of countries to adapt to change, even if it means a shift in ownership. Here's Warren Buffett to provide further insight into the current state of commercial real estate. How significant will the losses be, and which sectors or regions appear to be particularly affected?
At real estate generally, you'll understand what the phenomena that's happening if you remind yourself that that's the attitude of most people that have become big in the real estate business, and it does mean then that the lenders are the ones that get the property, and of course they don't want the property usually, so then the real estate operator counts on negotiating with them, and the banks tend to, extend and pretend, and there's all kinds of activities that arrive out of commercial real estate development, which occurs on a big scale. But it all has consequences, and I think we are starting to see the consequences of people who could borrow at 2.5%.
As Warren Buffett was saying, commercial real estate starting to see the consequences of high borrowing rates. His statement underscores the significance of monitoring interest rates and their impact on various sectors, including real estate. Commercial real estate, which plays a vital role in urban economies, faces considerable hurdles. Its primary challenge is the sudden spike in borrowing costs, setting off a series of repercussions throughout the sector. As interest rates steadily rise, attaining financing becomes more expensive and intricate, leading to uncertainty for developers and property owners. This highlights the need to understand the real estate market's dynamics, especially its connection with financial institutions. It reminds you that financial decisions in real estate can have substantial consequences, affecting both individuals and overall market stability. Additionally, it emphasizes the role of economic factors like borrowing costs in shaping investment decisions and market dynamics. As an investor, keep this in mind when evaluating real estate opportunities. One of the immediate and evident consequences of the escalating borrowing costs is the significant slowdown in commercial real estate projects. As financing expenses soar, previously viable ventures suddenly find themselves on the verge of becoming unfeasible. As a result, everyone is witnessing a troubling trend where projects come to a standstill, leading to costly delays or, in unfortunate cases, complete cancellations. This reluctance to proceed with development hampers the growth and transformation of our urban areas and poses obstacles on several fronts. The effects of this situation reach far beyond construction sites and office buildings, affecting the core of our communities. Small businesses that rely on renting commercial spaces face the relentless pressure of surging rents. These inflated costs, shouldered by property owners grappling with their financial challenges, pushed many cherished local shops to the brink of closure. The ripple effect of these closures is felt by consumers as prices rise, adding further strain to the delicate balance of local economies. Investors deeply involved in commercial real estate find themselves facing an equally troubling situation. The soaring interest rates are like a corrosive force, gradually eating into the returns generated from rental income. This threat looms over the potential erosion of profits and poses a challenge to the attractiveness of these investments. Pursuing financial gain through real estate ventures becomes significantly more challenging, primarily because the heightened costs associated with borrowing money start to eat into the bottom line. In simple terms, the profit margins for real estate investors begin to shrink due to the increased expenses tied to borrowing, making it harder to achieve the desired financial gains from their ventures. This adds a layer of complexity and risk to real estate investing. Now let's delve back into the insights of the legendary investors, Warren Buffett and Charlie Munger.
If you have a temperament that when others are fearful, you're going to get scared yourself, you are not going to make a lot of money in securities over time in all probability.
Warren Buffett reflects a fundamental principle of successful investing: be fearful when others are greedy and greedy when others are fearful. This timeless guidance serves as a vital reminder to exercise caution during periods of irrational market exuberance and, conversely, to capitalize on opportunities when the majority succumb to panic. When Buffett suggests having a temperament that doesn't succumb to fear when others are fearful, he highlights the value of contrarian thinking. In investment terms, contrarian thinking means going against the crowd. It implies that during market turmoil or when pessimism prevails, the prudent investor should not be swayed by the prevailing sentiment, but should instead look for opportunities. Buffett's words hold significant relevance in the context of commercial real estate. They emphasize the critical need for investors to remain vigilant, especially in the face of escalating borrowing rates. This counsel encourages astute investors not to follow the crowd blindly, but to adopt a discerning approach when assessing risks and opportunities. It underscores the understanding that market sentiment can sway between extreme optimism and pessimism, which can impact investment outcomes. Warren Buffett's wisdom encourages investors to maintain a level-headed perspective, allowing them to make informed decisions based on fundamental analysis rather than succumbing to the emotional sway of market dynamics. In essence, it reinforces the importance of prudent decision-making in the ever-evolving commercial real estate landscape. Another equally remarkable and legendary investor to mention is Charlie Munger. Munger, known for his enduring wisdom and as Warren Buffett's unwavering partner, offers valuable insights through his guidance. Here's Charlie Munger's famous quote, "Spend each day trying to be a little wiser than you were when you woke up." Munger's emphasis on the importance of continuous learning and adaptability, qualities of utmost significance in the dynamic realm of real estate, especially when faced with dramatic fluctuations in borrowing rates. Munger's counsel takes on a profound meaning. The ever-changing nature of the real estate market, coupled with the unpredictability of interest rates, demands that investors stay well-informed and remain flexible in their approaches. Here's why Munger's advice is crucial. 1. Continuous learning. Real estate is a multifaceted field with various aspects, from market trends and financing to property management and legal considerations. Embracing a continuous learning mindset allows investors to stay updated with industry developments and adapt to evolving conditions. 2. Adaptability. The real estate market can be turbulent, with shifts in demand, economic factors, and regulatory changes. Being adaptable means investors can pivot their strategies as needed, responding effectively to market fluctuations and seizing opportunities. 3. Risk management. In a market where borrowing rates can drastically impact investment returns, it is vital to be well-informed about these rates and their potential future changes. Investors who continuously educate themselves on financial matters are better equipped to manage risks effectively. 4. Informed decision-making. In an industry where decisions can involve substantial sums of money, pursuing wisdom through learning ensures that investors can make well-informed choices, even when facing uncertainty. Munger's insights serve as a crucial reminder that acquiring knowledge and maintaining adaptability are not merely assets but requirements for navigating commercial real estate's dynamic and often unpredictable landscape. These qualities empower investors to make informed decisions, mitigate risks, and position themselves for success, even in uncertain times. The commercial real estate sector's struggle against soaring borrowing rates commands our unwavering attention. This challenge, while formidable, need not be impossible. With the invaluable insights of seasoned investors like Warren Buffett and Charlie Munger, you can confront this trial with a measured and strategic mindset. Their wisdom serves as a beacon in the storm, guiding you toward a more resilient and prosperous future in commercial real estate. Thank you for joining me on this exploration of the commercial real estate world. Don't forget to subscribe to my channel and ring the notification bell to stay updated on my upcoming videos. Remember that knowledge is empowering, and understanding the implications of high borrowing rates can guide you in making informed decisions in a dynamic market.